Brief check-in on some business news now, and while Asian markets fluctuated this Monday on fresh trade fears after Donald Trump decided to impose those tariffs on Colombia, which we were just talking about. That spat said to have been cleared up for now at least. But in other business headlines, well, big tech's earnings season kicks off this week with a flurry of announcements from some of the industry's most important players. To get more on this, we can cross to Chief Market Analyst at GTC, Jameel Ahmad. Jameel, firstly, what are the main market trends?
Well, I think you just pointed out there's a lot of sensitivity to headlines like you've just been saying in the introduction regarding the supposed or the threatened trade tariffs. Definitely, when it comes to that presidency, we all know that the marketing tool or the messaging that was used before the election was that trade tariffs or tariffs will be the favorite word in the dictionary. And I think we've seen that come to fruit. Overall, though, investors are looking at a big week in financial markets because we have to hear from the central banks. Also, we've got a number of earning reports from the technology giants. This week alone, we're going to hear from Microsoft, Meta, Tesla, and then Apple at the end of the week. Obviously, these huge companies have such a huge market capitalization and value now that it equates to more than a number of major economies. So that's going to weigh in the market. But this Trump news and the headlines, the sensitivity, that's also going to be driving sentiment. And I think investors are definitely going to be kept on their toes one way or another.
Jameel, do you think that the Fed is going to cut rates now? Trump has been asking for them, but many say it's unlikely.
No chance. Categorically this week, 100% chance of no interest rate cuts at all. And we also have to take into account here that in some ways the bark is worse than the bite. Because yes, he may have said for lower interest rates immediately. However, if we go back towards the days before the presidential elections in November 2024, he also said that while he can give his opinion on central bank policy, he cannot influence the Fed. And this is where we see some contradiction or forth. But again, this is what we expect. This is what we knew we were going to get across different matters. This Make America Great Again version 2. We all watched version 1. But we're going to see the same movie play out. We're just seeing the movie be accelerated towards more action sooner than maybe we saw in version 1.
Okay, I'm liking the confidence. What else are you keeping an eye on, Jameel?
Actually, we're going to be paying attention to the central bank decision from the Fed, not because of this, instruction that came in from the US president, but actually because we need to have an update on what their opinion is on central bank policy for 2025 overall. Heading into 2025, we did think that we would get maybe another 2 interest rate cuts, adding to the 3 that we saw in 2024. However, since then, economic data of the United States has remained very strong. The economy added more than 250,000 jobs. Last month, we've seen some upward revisions of GDP growth. So potentially, they don't need to actually cut interest rates further, but it's whether they're concerned about tariffs or maybe some other downside global economic risks. So that's what we're waiting for this week, because there is some uncertainty in the air when it comes to what the Fed, US Central Bank's intentions are for 2025, regardless of what headlines we might be seeing come through following some certain comments.
Okay, Jameel Ahmad of GTC, thanks indeed for your time.